What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol XELA for Exela Technologies. On the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This is going to be more of an update since we did cover this one recently, so zooming in on the daily just to see if our levels sort of held up here. I would argue yes, right? So we had this little shelf of support, which we discussed here at $2.92. We held above it for a majority, these 3 days here. You can see this those lower wicks certainly respected it, and then a bit of a flush developed once we broke it there on this Friday session. So what are we going to do about this, right? I would argue we really need to focus on the 30-minute time frame chart simply because of how sideways this action was here to learn more about this price action. So we have that 292, which we discussed, again, held up above it before breaking down for a little bit of a flush. I would argue that we should just move this area of support up a little bit higher, something like that, right? And we're also getting these prior wicks, so prior resistance turns to support, 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 and then when we get the break, we see the flush down below to our level underneath. We've recovered now. And what I want to point out as resistance and the potential next trade idea would be a breakout kind of over this $3.25 mark. If we can do that, again, we're clearing prior resistance from in here, acted as support, and then most recently resistance here. It simply would make sense to me that we would retarget this high from in here around $3.54. So a potential trade idea would be holding up consolidation up here like this, pressure cooker top, 30-minute bull flag, whatever you want to call it, take the break up and over 324. Let's do what we always do when we have these sort of moves in the market, which is take out our Fibonacci's, go from the low all the way up to the high and see where that 38.2 is. I would argue any consolidation that holds up above $3.10, so something that could look like this, would be a perfectly healthy and normal bull flag. And then after that, again, the break is out over the top, over $3.25. I just split the difference there. It's also a nice psychological number, kind of baked in between the two. As we know, $3.54 is the next target. If some real strong momentum comes in, maybe people are looking at this as a pre-earnings run-up play, right? So that's on 810. Then maybe the next daily target is in store up around $3.80. So that's a potential upside case here. Now, if we start breaking down under $3.07, I would argue it's kind of not game over, but just look for this to kind of sort of fade lower, probably arguably down towards this $2.51 mark. Again, the reasoning behind that is simply because we've had 4 days now of sideways consolidation. We also had a breakdown here. If the bulls are going to remain strong, like the sellers had their chance, right? So now it's up to the bulls to hold strong and continue this uptrend that it's trying to build here from a daily perspective. Actually, just looking at that, a nice support trend line could be drawn in from the lows here, doing something like that. Again, if I just sort of scrunch this up a little bit so you can see here. So anchors down here, touch 1 is essentially here, and touch 2 is here. That could be in play as well. So a number of things to look at, but overwhelmingly, I would favor the bullish setup here, simply based on the fact that this failed breakdown could not materialize, and we've since bounced higher, recaptured a number of these levels. The break is over 325. So if you enjoyed today's video, if you learned anything new, let me know down below in the comments section or by simply leaving the video a thumbs up. Don't forget our main channel is linked down below in the description. And that being said, we wish you all a green trading week.